Good morning, ladies and gentlemen. A warm welcome to one and all for the third module of the I3T3 Mega Webinar. This module is all about the simplified price action trading, which is the level 1 trading, where we try to assemble all the building blocks of price action and then build a story around the price movements in the markets. Okay, so please go through the disclaimer once. I extend my warm welcome to the specific students of the price action course. It's a great pleasure to have you guys in this class today. So just subject to the disclaimer, friends, there is nothing called secrets in markets. Okay, nobody can claim any rights over any knowledge in the stock markets. Okay, any topic for that matter, because WD Gunn himself did not stake claim on his principles. Okay, the world is free to use the square of 9, the square of 360, the square power of 8, and whatever we studied in the last module. So these concepts are universal in nature. So various people contributed in various ways. Okay, if you guys have noticed, I never spoke about any NDA with respect to my particular program, because there is nothing that I have invented myself. Most of them are assembling, packaging, and some of them good discoveries that we have done. All right, so nobody can stake claim on anything. I am not taking claim in any of my teachings, but all that I can tell you is this whole program has been packaged by me with a lot of hard work and efforts. That's we always say, please respect the privacy agreement. Okay. So for the few people who have joined newly today, I am Ashok Devanampriya. I'm the founder director of Kautilya Capital LLP. I've been a stock market professional from last 7 years and full-time professional trader from 2 years. I run a traders cafe in Bangalore, which is an exclusive place for traders to come, every day trade, eat, live, breathe markets. I'm a techno fundamental investor, positional price action trader, and also an intraday automatic trader. So that's about my background. So let's start with price action trading. Friends, read this statement from Larry Hite, one of the most valuable statements ever made about trading. This line itself speaks million pages about trading. There are only two basic rules about winning in trading as well as in life. If you don't bet, you can't win. If you lose all your chips, you can't bet. So keep betting so that you might win, but ensure that the bets are small so that you will continue to bet. This is one strong statement. If this statement goes into all of your mind, you're all traders. I promise you're all traders. It means a lot. So what is price action trading? Price action trading is simply the process of trading in the markets just by looking at the price without the support of any indicators. Why? Price is happening at this very moment. Price is the ultimate truth that has happened today. Okay, because no individual in the world can define a price. The price of the stock markets are driven by the dynamics of supply and demand. It is defined by the war between buyers and sellers. So we focus only on price. Remember, price action trading is applicable to all formats. All formats. So people keep asking, sir, in this price action, whether it is applicable for intraday, positional, investing. Price action is the one and only method which holds good in terms of principles and concepts for investing, positional trading, intraday trading, everything. You can, the rule applies for a monthly candle, weekly candle, daily candle, hourly candle, 15-minute candle, 5-minute candle, and even a 1-minute candle. But remember the fact, as you go down the time, as you go to lower time frames, the naturally the challenges increases. Okay. So there are no indicators in price action, as we already discussed. It is happening at the very current moment. Price doesn't care about past nor worry about future. Price is happening right now. At the same time, price will always respect history. It doesn't cry about history, it respects history. There's a lot of difference between cribbing. We as humans, we crib about past and worry too much about future. We don't live in present. The price, of course, it remembers the history, but it doesn't care about the past. I mean, the care about the future. So we focus on price action. Your eye is the indicator. So we're not going to use any, even I don't think we're going to use volume in this conversation. There are some price action traders in this world who also uses volume sometimes to get double confirmation. I guess we will stick to the price action story itself. Okay, where only price makes all the decisions. All right, friends. So why price action is superior to indicators? See, many of you would have traded all kinds of indicators, the moving averages, the RSI, stochastics, ADX. All indicators are function of price. All indicators are calculated using price as the base. So which means every indicator is a function of price. Indicator is equal to F of price. All indicators are delayed. No indicator will give you instant perfect timing or entry level. Indicators always take time. Okay. Price is like live cricket. The match is happening, you are enjoying the game. Indicators are like highlights of the match. Yes. Highlights are not that exciting because highlights are about the match which is already over. The destiny is decided. Similarly, indicators give updates or information to you most of the times in a slow manner, depending upon the time frame you use. So even if your indicator is a derivative of open price, close price, high price, low price, whatever it is, finally it is still an indicator. There are indicators like Ichimoku, where people look at it from a futuristic perspective. Even that future plot is a function of the current price only. We used to do a lot of forecasting in the world of supply chain. All that forecasting is based on current price. And what is the guarantee that the forecast works? Okay. So because of the delay that the indicators give, they will destroy the edge in the long run. Okay, I hope and I insist everybody in this class to realize that moving average crossover is the biggest fraud indicator in the planet. You bring any moving average crossover, any moving average indicator, my friends, I mean, this is not with arrogance nor with attitude. It's based on knowledge. I'm telling you that they will never work. But if at all somebody comes to me giving a beautiful strategy of some crossover, I'm telling you, I will give them the strategy and automate the whole thing for free. We have taken tremendous trials on these kind of aspects and we have discovered that they don't work. And our discovery is not based on one trade, two trade, five trades. Our discovery is on thousands of trades, 5,000, 10,000 trials. Because we do automation, it is very easy for us to validate things. And many manual traders, whoever claim to have a holy grail, some golden cross, some death cross, that nobody, rest of the world doesn't know. Sorry, an optimization engine can bring the best indicators together, but we don't use them because they are called as curve fitting. All right, let's move on to the basic blocks. How many of you know Steve Nissen? Steve Nissen is a man who introduced the concepts of candlesticks to the Western world. So this is a very basic chart. I hope every one of you read the 3 documents we shared with respect to the pre-webinar material. Okay. The left side you see a bullish candle. The right side you see a bearish candle. And there is a open, there is a high, there is a low, and there is a close. All right. So the left side, that small dash is the open, which describes that is a point of open, and the right side dash is what defines the closing point of the day. This is a standard way in which charts, the bar charts are defined, and I am sure every one of you are aware of it, and I hope every one of you have seen that particular document which we already shared 1 month ago. Okay, so we do not use basic bar charts. Instead we'll use candlesticks charts. So in case of the second candle, which is the bearish candle, it's a red candle. Ideally, what does it mean? It's a red candle means price has fallen. Where did the price open? The price opened at the top. The price opened at the top, and then price closed at the bottom. So price has gone down, which ideally means the price has fallen. So red candle. As usual, open is the left side dash, close is the right side dash. This is universal in nature, very basics. I do not want to spend too much time on these aspects because we are not here to do these things today. The Japanese candlesticks were invented by rice traders in ancient Japan. There was a time, friends, I used to extensively use a particular moving average indicator, which was called as the 20 and 100 EMA indicator, fueled with a concept called pocket pivot. Okay, this was a concept which I learned from one of the disciples of William O'Neill, and it was working well. So that was not used for trading. That's a different way of trading in the moving averages also. Not that, every time you have a moving average crossover, you take a trade. No, it doesn't work that way. And after some time, I came across Ichimoku. Ichimoku was again one of the fantastic indicators designed by the Japanese themselves. The same rice traders of Japan invented Ichimoku. And Ichimoku was much better than a indicator like an RSI or a moving average because it had a view of the past and the future. And I used Ichimoku for almost 3 years, 4 years. And finally, I jumped into price action and I concluded that there is nothing as precise as price action. And I finally landed in price action. Okay, this is my journey. I am a man who started with indicators and I went to jump to Ichimoku, and from Ichimoku, I finally jumped to price action. So Steve Nissen made this book popular in US. Okay, it is much superior to any of the chart patterns that are available today because of its extreme clarity. When you look at the candles, you will really understand what is happening. Okay, so we are going to use only candlesticks charts in the entire journey of our price action trading. I hope everybody knows that this is a bullish candle. Okay, so this is a bullish candle, this is a bearish candle, and I hope everyone understands why that is bullish and why that is bearish. Okay, the green candle, the open started at the low bottom and closed at the top. The red candle open started at the top, closed at the bottom. Okay, similarly, open, high, low, close. Clear, friends? So next, let's move on to the next level of candlesticks definition. Now, the rectangular box that you see from the open to the close, okay, is called as a body. It's called as a body of the candle. Whether it is a green candle or red candle, it doesn't matter, because in a green candle, the open is at the bottom, close is at the top. In case of a red candle, open is at the top, close it at the bottom. So it doesn't matter. The length is called as the body. And there is something called as wick at the top. The distance between the close to the high of a green candle or The open to the high of a red candle is called as an upper wick. In candlesticks language, they use wick. Some people call it shadow also. Based on my experience, I prefer calling it wick. Okay. Similarly, the distance, the length from the open of the green candle to the low of the green candle, or the close of the red candle to the low of the red candle, it's called as lower wick. Yes, it can be called as wick, it can be called as shadow, and some do call it tail also. Okay. So is it clear, friends? Anybody having question, buzz me right now. It's pretty simple and straightforward. Great. So I assume everyone understands this. Let's move on to the next. Candlesticks give lot of insights on various aspects of price action, but there are many times candlesticks don't tell some information. So what are they? So we have a bullish candle there, which has, as usual, the open, high, low, close is defined. I have marked all the 4 lines to depict the 4 levels. How did this candle form? This is a beautiful green candle. It is a bull candle. We all know, opened at the bottom, closed on the upside. It formed a high, it formed a low. Agreed. But what was the journey this candlestick took in order to become this complete candle? Let's take a scenario. Let's say it opened, right? From the open, it formed a high. Possible? Price opens and it directly keeps going up. It forms a high and it stops there. And from there, it might come down. It might come down to the bottom and it might form a low. And then it reverses from there and finally closes at the closing price. Is this clear? This is the path that this candlestick has taken. It opened, it formed the high, it came down, it formed the low, and finally it again went up to form the close. So any questions here? Buzz me. If nobody buzzes any questions, I assume everyone understood this. All right. Now, let's see the second scenario. The price opened, as usual, the same point. Instead of making the high, the price made a low. And then the price went up and formed a high. And then price came down and formed a close. Friends, in both these cases, the candle is the same candle, the same green candle. This is the only factor which you as a trader will not know, whether it formed the high first or the low first. The price can form high and then low, or it can form the low and then form the high. Both are fair and correct. This is one aspect that is never visible in a candlestick. If you guys understand, we will move on. I will wait for 10 seconds for any question. If there are no question, we will continue. So meanwhile, there was a question asking, what was your experience with Ichimoku in terms of, I really enjoyed Ichimoku because I was more of a techno fundamental investor. When I started investing, over the fundamental aspects which we learned in the first module, I superimposed that with Ichimoku on the technical studies. Once I discovered WD GAN and price action, I left Ichimoku because I found those methods to be much more superior because they were all purely based on price. Now let's talk about blending of candles. Friends, we have a red candle first. Okay, there is a red candle, and suddenly next to that red candle there is a green candle. So what is that green candle? Can somebody explain what has happened with the green candle? The price came down in the red candle and the price gapped up slightly above the close of the red candle and went above. Okay, and then let us do this. If I want to merge these two candles, what would be the combined candle look like? For that, we all started with the first candle, right? So whenever you are blending a candle, blending is nothing but joining, combining two candles to form one single candle. For blending, we'll always take the open of the first candle, the highest high of the two candles, the lowest low of the two candles, and the close of the last candle. Okay, and then we will assemble it. So what we did, we took that open, we took the highest high of the two candle, we took the lowest low of the two candles, and we also took the close of the last candle. So since there are only two candles here, we have to take the close of the second candle. And now let me put the block. What would be the output? So how to draw the combined candle? Very simple. You know that open to close or close to open is the body of the candle. If the open is below and the close is above, every one of you know it's a green candle. If it was opposite, it would have been a red candle. So the close to high is the upper wick. In this case, the open to low is the lower wick. Okay, and the output is called as a pin bar. This kind of candles are called pin bars. Is it clear, friends? I'm going to wait for another 10 seconds to make sure that everyone understood. Any questions? Shoot me right now. Awesome. So which means these are all very simple. There's a quick request for a repeat. There are two candles. One is a bear candle, which is the red candle, and followed by a bull candle, which is a green candle. Now we need to assemble these two candles to get a combined candle. For that, the rule of blending is take the open of the first candle, take the highest high of all the candles, take the lowest low of all the candles, and take the close of the last candle. In this case, the close is the second candle, and hence we took the close of the second candle. And we plotted the lines there, and those are the open high low closes that we consider in creating the combined candle. And the combined candle looks like the one on the right side. And we clearly discussed already that body is the distance between the close to open, and the close to high and the open to low, they are the wicks of a bull candle. Okay, so we are extensively using candlesticks in all our conversations. We are not going to use any kind of other concept, something like Heikin, Ashi, and so on. Okay, friends. Now here is an example. Okay, this comes from stock charts. We picked it from the internet. So this the first example is about, let me take a marker. Okay, there are three candles. Okay, there are three candles there. When you assemble, what did that guy do? That guy took the first open of the candle. Okay, and he took the lowest low of the three candles. He took the highest high of the three candles, and he took the close of the last candle and created the one big strong momentum candle. So what is momentum candle? We will discuss about it. So don't worry about those concepts. And you might see lot of uh, technical jargons at the bottom, like hammer, bull, bearish engulfing, shooting star, cloud, blah blah blah. So guys, don't worry about all that. Okay, so those you don't have to remember any of those things as far as price action trading is concerned. Okay, see the next candle. See, come to this one. This is an interesting box. So there, this is the example which we did, correct? Right now this is the example which we did, roughly the same example which more or less we showed in the previous candle. Okay, now let me take this lovely example. I'll take this example. This is an interesting thing. There is a strong bull candle, and immediately the price gapped up, friends. It gapped up. See, the price opened here. The price opened here. The second candle price opened here, which means the open was much higher than the close. So that is called as a gap. And then it fell down to a particular point. So what do? We take the open of the first candle. We take low of the combined two candles. We take the high of the combined two candles. We also take the close of the two candles, and finally the open to close becomes our body, and the remaining points we just join to get the wicks. That is how the combining happens. So 10 seconds I'm going to wait. If I don't hear any questions, we are going to jump out to the next steps. All right, so in fact, as far as lowest close of the two candles, no, the lowest low of the two candles, you need to take the open of the first candle, the close of the last candle, the lowest low of all candles, the highest high of all candles. Yes, open and close becomes the body. Open and close becomes the body, and the rest becomes the wick, which are nothing but the shadow or the tails. Yes, open is always the open of the first candle. Close is always the close of the last candle. Low is always the lowest low of all candles. High is always the highest high of all candles. Great, sounds good. So let's move on. So the most popular candlesticks. So friends, these are some of the most popular candlesticks that are followed in the markets. People extensively use candlesticks themselves as a ways of achieving results. Okay, people act based on candlesticks, but candlesticks, two candlesticks alone will not give a complete picture as to what is happening in the market. That is a very amateur way of trading. Okay, however, these are some of the basic candlestick patterns that are used today. I honestly do not have time or interest in teaching those things, because they are not the crux of the whole story. But please understand one thing. Number one, all the namings you see, those naming convention don't matter for us. Okay, none of you have to struggle to remember the so-called names. That is a Homer, this is a Doji, and so on. You don't have to remember. All that you need to remember is who is under control. Okay, now look at this. Price has come down. Why? It's a bear candle, and price has gone up because it's a bull candle, and price is here. So who is under control here? Are the bulls under control or the bears under control? Yes, the buyers are in the control. Okay, so whenever any pattern we are working, we will observe both the body and the wicks. to make our decisions. It's not just that they say our analysis would be based on body or the analysis would be based on wicks. It is always on the whole picture or the holistic picture. Okay. So there is a saying that when we look at these things in as a family, should I look at the close above, or should the close go above the previous candle, or if only wick is going up or down? You don't have to worry about all those things. Those things we will talk at a much later point of time. For now, just remember who is under control. That's all. So now price, this is a green candle, price went up, and there is a red candle, price came down and it closed here. Who is under control? Simple. The sellers are under control. Why? Price have come down. Now price went up, and then price came down and stopped at the 3/4 of the previous candle. Okay, if you take this particular candle, the first candle, this is the midpoint, this is the 75%, this is the 25%, roughly this is the 25. So roughly price came and closed near the 25% of that candle. So we will all look into those aspects later. For now, the only thing you should know, the price is bullish or bearish. So whenever a price falls below 50% level, all of you remember 50% is very powerful. Why? Gann always spoke about lifetime high to 50. Even for a candle, for the previous candle, at that moment, if it comes below 50%, then purely sellers are under control. Is it clear, friends? Same thing holds good here. This is called dark cloud cover. We don't worry about the name. Price went up, price came down, price closed below 50% level. There is an interesting question. So should the price fall below 50% of open to close or high to low? Let's take high to low. Let's take the high to low. That is a standard phenomenon. However, there are many times some different characteristic candles come where we should change or deviate from the standard rule. Okay. And when you are reading these candles, friends, remember, try to think why this is bearish. Can you guys think about it when you try to blend the two candles? Take this guy. Open is here, high of the two is here, the low of the two is here, open of the two is here. I'm sorry, close of the two is here. Okay. So 1 second, friends, let me clear it off. Okay, so the open is here, the close is here, the high is here, the low is here. So this is again it is a pin bar. Okay, that is the meaning. So when you merge two candles, it will emerge into another candle. So you are seeing all this 6 to 7 different Japanese names like harami, doji, and bearish, engulfing, and so on. Every time you merge two candles, you will get another candle. So we don't have to waste time in understanding what candle it is, what emerged. No, the purpose is to understand who is under control. That's all. That's the simple thing that I want everyone to focus on. So price came down, price went up and closed here. Purely bull zone. Bulls are controlling the scene. Price went up, price came down, price closed here. Extremely bear zone. Sellers are under control. Okay, look at this one. This is interesting. Price comes down. Price started here. Where is the close? This is a red candle. If it's a red candle, close is always below the open. So here is the close. What is the scenario here? The close is equal to the low of the candle, which means the close is happened at the low of the candle, which means it is again very bearish because price does not want to go up. Similarly, here price closed here, so close is equal to the high of the candle. So we take it bullish. I personally take it bullish. This is the only concept. This is called as a doji. Friends, this is called as a doji. where the open and close are always very close to each other or almost same. When that happens, you can't see the body of the candle. The body disappears. Why? The body is what? The length between the open and the close. If open and close are same, where is the body? Body is 0 or 0.5. It will be so small, you can't see the body, you'll only see the wicks. Okay, this is a very strong place of indecision, which means confusion, where the bulls and the bears are fighting equally and there is no domination, there is no clear winner. Okay friends, to summarize this slide, all I want to conclude is, as price action traders, we don't have to waste time in understanding the kind of candle, the amount of blending, what is the third output of the candle, and so on. These are all super theoretic stuffs anyone can study in college. As practical traders who want to, trade in real-time basis, all we should know is who is under control. By looking at the candles, we could make out who is under control, and that is enough for us. Any questions here? Can everyone give me a check so that I can proceed? I assume everyone understood the purpose of this slide, and also you guys are clear as to why I do not want to spend too much time on this. Great. Thank you. Thanks for the yes. Let us move on. Okay. Okay. Now let's come to the strong building block of the candles. Okay. This is called as a momentum candle. Momentum candles are those candles where the bulls and the bear are in clear domination. By looking at the what kind of candle is this? It's a very clear green candle, a very strong green candle. There's no confusion about it, which means who is controlling now? Only buyers are controlling. Okay. Second, momentum candles are those candles where the body of the candle is taller than the both the wicks combined. Please understand this. The body of the candle should always be greater than the sum of the length of the two shadows or the two wicks or the two tails, as the case may be. Which means X, which is the body, is greater than the length of Y and Z, which are the shadows. If it's always, I technically, what does it mean? It should be greater, which means it has to be naturally greater than 50, no? So the body should always be greater than 50%. And higher the body is better. Higher the body, higher the momentum, higher the strength. Okay. Let's take an example. This is a strong green candle. Friends, this is a strong green candle. Can you guys tell me whether what kind of a candle is this? This is a candle where there is no shadow, or there is no wick rather, which means open is equal to low, close is equal to high. These candles are mathematically called as Morobozu candles. In Japanese, they call it as Morobozu candles, and this is 100% body. So where is the wick? Zero wick. Why? Open, because open is equal to low and close is equal to high. These kind of strong Morobozu momentum candles very rarely appear on a higher time frame. If they appear, which means there is tremendous power in the journey of the stock. Okay, there is a fantastic statement Okay, that's a brilliant statement. That's why it's good to take up sometimes questions. There is a saying that in this case, if I have to blend these two candles, I will take the both open and close of second candle and not open of first candle. Is it correct, friends? I clearly told always you must take the open of the first candle, the close of the last candle, and the highest high of the two of all the candles, the lowest low of all the candles. Irrespective of where the candle is, you must start from the open of first candle and end at the close of the last candle, which is very, very critical. Friends, don't apply the highest high and lowest low formula and open and close. The open and close are always fixed. The highest high and lowest low is applicable only for the high, is only applicable in that case, not for open and close, and irrespective of any number of candles. What kind of a candle is this? We all know a red candle is a bear candle, where the close is below the open, and we can see that the body is at least 60% of the total length. So it is a momentum candle. How about this? This candle is another bearish candle where there are no wicks. So what percentage of it is the body? It's 100% body, because open is equal to high and close is equal to low. It's a pure bearish Morabozu. Now tell me, how about this one? So body is around 80% of the combined. It's a pure momentum candle, because body is always bigger than the shadow. What about this one? The open is equal to low. There is no wick at the bottom, but there is a wick at the top. So definitely the body is bigger than the single wick. So this is at least 60% to 70% body. So naturally it is a momentum candle. What about this one? I'm putting a lot of examples so that it goes into your thoughts, friends, because I do not want these basics questions to emerge again. So as we go ahead, there are some 15 rules to 20 rules that we all need to follow. These are all some rules. These should automatically imbibe into your thoughts. By looking at a candle, you should know this is a momentum candle. Simple. What about this one? So this is a bearish candle. The close and the low are the same. Okay. Now again, same story. Do we ever care whether it is bearish and bullish in deciding a momentum candle? The rule for momentum candle is very clear. The rule is very simple. The body should be greater than the shadows. That's all. Okay. And here is the last candle for your example. And there is one request. Why do you say impulse is the key? Good observation. What is impulse? Impulse means speed. Momentum candles are those candles who have good power, where only single person is in control, either a buyer or a seller. They are very clear. That candle as an individual is very clear that he is a bull or a bear. There is no confusion there. That's called impulse. Impulse is the pace of movement, the speed of movement. Momentum candles show that there is free movement. Nobody stops him going. There are no humps. It's a highway, freeway. Wherever humps comes, there are issues. The body has to be greater than both the combined wicks. Sometimes what happens, you will have, see the last candle, you have only 1 week, so that is fine, but you don't have a wick on other side, so what? So which is ideally means x is greater than y plus 0. There is a request. Okay, so one there is a request, so what I will do is one last attempt to, I'll go to MS Paint. Okay, now the request is this. Okay, so there is a, okay, let me take a new one. Okay, this is one simple example I'll write. I'll do this. This is best. The pen is better. Okay. Mm, there is one doji. There's one more guy where the momentum is smaller. Both of them are not momentum candles. Then we got a big momentum candle. Why? Don't care it is red or green. Don't worry about it. Okay. And now I got few more candles like this. So what are the 4 rules of blending? The 4 rules of blending says that the first candle, let's say this is a green candle, friends, for clarity, let's say this is a green candle, let's say this is a red candle, because to get the open and close you need to know what kind of candle is this. That much is clear. So green candle, this is the open, this is the open. What is the highest high of the candles? This is the highest high. What is the lowest low of the candle? This is the lowest low. And where is the close? The close of the last candle, and that is a red candle, and this is the close. So how does this candle become? It will be like this. Is this clear, friends? Is this clear? Okay, great. So now I am going ahead with the next concepts. Let me erase the drawings and let me go to the normal mode, and I'll go back to my PPT. And so one last question, when we are trying to blend, what are we trying to achieve? Very good question. Park it. We will answer it at a later point of time. And these candles, please understand, now what we are doing, we are trying to read each candle individually. Okay, but future, once the trading starts, we are not going to see individual candles. We are going to see as a holistic family. When you're evaluating a student for the exam, you don't see whether he did good in English or mathematics. We see how we performed in all the subjects. Okay, now the next candle is a base candle. So base candles are those candles where there is no clarity on who is under control. The bulls are ruling the game or the bears are ruling the game. They are the candles where body is smaller than the both the shadows put together. Okay, it means body must always be less than 50%, exactly opposite to momentum candle. Can you guys understand this? It's very crystal clear. So x is less than y plus z combined, where y plus z are the wicks of the candle on the upper and lower side. Now let me take you guys to the next question, examples. It's a beautiful base candle which we already saw. How about this one? So remember, friends, whenever you are talking about base candles, particularly, you should not worry about the color of the candle. Okay, Okay, and people say how many, sometimes people say how many candles can be merged. Fundamentally all candles are combined. What is a monthly candle? 4 weekly candles are blended to form one monthly candle. 5 daily candles are blended to form one weekly candle. 75 15-minute candles are blended to form one daily candle. They are all already blended. Blending is a default process in price action. You don't know that blending is happening because you are using a chart. Clear? Now, so these individual candles, let's learn them independently, make a judgment. When we get into trading, you need to see lot of things. Okay, so just come with me, stay with me. What is this? This third candle is also a base candle. Why? The body is definitely smaller than the total length of the wicks. How about this? How about this? How about this? What kind of a candle is this? Can somebody answer me? It is a momentum candle because there are no wicks at all. It is a momentum candle because body is bigger than the wick, because there is no wick. Okay, never ever think that a small candle without wick is a base candle. No, base candle is, the rule is always simple. These are all predefined rules. These rules will never change. Okay, base candles are also called as indecision candles. Okay, always base candles are the candles where there is a fight, there is a war, and nobody is emerging as a winner. Whereas momentum candles, it's very clear. You guys already know it's either a bullish momentum or a bearish momentum. Now don't ask me, sir, in base do we have a bullish base and a bearish base? There is nothing like bullish and bearish base. There's only one base, and that base is a for war between the two, and there is no clear winner emerging. Okay, so I removed that Morabozu, and I'll come back and put some more examples which are great examples of bases. Clear, friends? Now, before I move on, everybody give me a check that you understood everything. At least 10. Okay, great. Thank you. The color of the candle is always a matter only in momentum candles, not in base candles. Remember, I want to reiterate once again, in case of a base candle, the color of the color of the candle is immaterial. Okay, so we have learned both momentum and base candles. Let's move on to the next topic, the gap candle. Yes. So what kind of a candle is this? Is this a momentum or a base candle? It is a base candle. Now, then what happened? A second candle is formed, and that second candle is also a base candle because the body is small. Now, what actually happened? The first candle closed somewhere, the second candle opened somewhere, and there is a distance between the two, and that is called as a gap. The gaps are extremely critical in price action, and gaps play a pivotal role in making lot of our decisions. In case of price action trading, we take the gap as a momentum candle. In case of price action, we take the gap as a momentum candle. Always remember this. Whenever there is a gap, the gap is always considered as a momentum candle. And then when I combine this gap with the next candle, it will become a momentum candle. So what percentage of body is considered as gap? There are two kinds of gaps. One is a gap where there is no touching. This is a gap where the close of the first candle and the open of the second candle, there is a gap. There are gaps where the high of the first candle and the low of the second candle also will not touch. Something like this. Let's say this is the second candle. So this is the high of the first candle. This is the low of the second candle. This is also a gap. And this gap is a far superior gap because this is a gap where price has never come. This is a blank space in the chart. This is not a blank space in the chart. This is a place where price has already come. Because we have a wick, wick and wick are kissing each other. But this is a gap which is a powerful gap, which means that is a blank in the chart. Now let's bring the intelligence, friends. Tell me how the blending looks now. Blend the first candle and blend me the second candle. Where is the open of the first candle? The open of the first candle is here. The low of the two candles is here. The highest high of the two candles is here. And the close of the two candles is here. So this is the candle. And this is a green candle. What candle is this? What candle is this? So what we did, we found two base candles and both candles created a momentum candle. Why? They both created a momentum candle because of a gap. And we defined that gap is also is taken as momentum. So two bases, irrespective of their base conditions, they merged with a gap to create a powerful momentum candle. Whenever you talk about gap, you don't have to look at percentage of gap, 1% gap, 5% gap. Gap is a gap. The less higher the gap, higher is the momentum. That's all. Okay. And now bulls are in control. There are times when price splits. Okay. Price split is not a gap. Remember this, friends. Price split is not a gap. Just because your 100 rupees price becomes 50 rupees, that doesn't mean there is a gap. That means the chart is wrong. The entire chart has to be redefined. Throughout the length of the chart, you have to divide by 2 and take the length. Because instead of 1000 rupees, you got 500 rupees. The price split is never a gap. All right, friends, let me move on. Never ignore the power of gaps as they make a significant difference. So why do gaps occur? Gaps occur for multiple reasons. You go, let's go. I'm a real estate guy. I want to buy a property in the airport area. Okay, and I went and bought a property for 10 lakhs. Now you are my friend. You come to me and say, Ashok, I heard you bought a property. Shall I also buy? I said, okay, go and buy. And the moment you go and buy, he is quoting 14 lakhs. Directly 4 lakhs jump. You question why? He said, sir, last week There is an IT park that has been proposed here. There is an SCZ which was proposed here. There is a double track highway that is coming here. So what is that? That's a news. The gaps occurs because of news which pushes the price very high or very low. Ultimately, they are driven by supply and demand. When good news come, more demand happens. When bad news come, more supply happens. Okay, I'll ask you a beautiful question. Now let's say the second base is a red candle. What is the change in the story? Now let's say the second base is a red candle. Now friends, tell me what would happen to this candle? What would happen to this candle? So this becomes the red guy, correct? And then what happens? So the open of this candle is this. Let me draw this now. So what we did, the second candle is base. How does it impact the candle? Now this is the open, this is the open, this is the low of the two candles, this is the high of the two candles, and this is the close of the two candles. So your momentum will become little smaller. Before it was like this. It is still a momentum candle. How many of you understand? This is the old one, this is the new one. Okay, that's about it. Always remember, once again, bases you don't have to care about the color of the base. Okay friends, let's move on. Now there are two more kinds of candles. What candle is this? It is a base candle because the body is small. What candle is this? It's a momentum candle. What candle is this? It's a base candle. And what candle is this? It's a momentum candle. So what is the observation? You guys have clearly understood the base and momentum, but remember these candles are also called as extended range candles because the length of this candle is very high. Irrespective of being a momentum or a base candle, that candle can also be an ERC candle, which means it is an extended range candle. Why extended range? The range of the candle, the distance between the high and low of the candle is very high. Similarly, there is something called as narrow range candles. So what kind of a candle is this? It's a base candle. What kind of a candle is this? It's a momentum candle. What kind of a candle is this? It's a momentum candle. What kind of a candle is this? It's a base candle. Now, can you guys make out the difference between the left candle and the right candle? These candles are too small in length, irrespective of whether they are momentum or base. They are too small in length. Okay, so they are narrow range candles. Now there is a question: how do you define an ERC candle? An ERC candle is defined based on the price of the chart and the past prices of the chart. When you look at chart, so remember this. Remember this. Don't ever think there is a price action that happens at 51% body and 49% base and we should trade 51. No, these are all guidelines. These are all guidelines. Okay, these are all guidelines based on which we need to act. Okay, so remember two things. There are momentum and base candles. Math is very clear. There are an ERC candle and an NRC candle where one side the length is very high, the other side length is very small. Remember one strong statement from me, that is narrow range momentum candle is also a base candle for me. It's very small, no? That small congestion area may a lot of things can happen. Why should I really worry? Okay, just remember this. When we get into examples, you'll understand it. Okay, they are extended range candles and narrow range candles. Okay, now let us drill down into the candles now. So you people are asking, how many candles do we blend? Friends, blending is a part and parcel of the price journey. How many of you think, what is market? Market is a continuous flow of data. Stock market doesn't know time. Stock market doesn't know monthly, daily, weekly, 15 minutes. It is a river that is flowing. So you are the greedy person who want to stop that flow, and you are building dams in the form of candles. Why? For you to make some meaningful decisions. That's it. Market doesn't have any such thing as such. It is just continuous flow of data. Let's take this candle and let's assume this is a weekly candle. Okay. So now after ERC and NRC, we have come to the drill down of candles now. Okay. Right now I see a weekly candle. And how did this weekly candle emerge? Let's say day one was this. Remember, we are not now, we are going reverse engineering. Friends, remember, don't tell me that a weekly candle is formed and then the daily candles are expanded. Sorry, markets are always futuristic. Remember, after 5 days of daily candles only the weekly whole candle will emerge. Here in my example I'm doing reverse engineering to explain you all what is happening. All right, my friends. So this is the first day. What is a candle? What kind of candle? It's a base candle. Second day, what kind of candle is this? It is a base candle, and also it is also what? The second base candle is also an extended range candle. The third candle, another base candle. The fourth candle happened with a powerful gap up. What candle is this? A base candle and also an extended range candle. Why? Now tell me why you call it extended range. Now apply your thoughts. The day 2 and day 4 you feel it is extended range. Why? When you compare with the total length of the weekly candle, you found these are big enough for a day, but the other day 1, day 3 are small, so they are narrow range. Simple. It's just a judgmental phenomenon. There is no mathematics for that. That's it. Okay. And the fifth day of the candle is a base candle. So what happened? There are 1, 2, 3, 4, 5 base candles, but all 5 base candles created a momentum candle on a higher time frame. That is strange. Why? Can you guys make out? What is the theory? Can somebody type the 4 rules? Rule number 1, the open of the first candle. So the open of the day 1 candle is taken. Rule number 2, the lowest low of all the candles. So the low of day 2 is the lowest low of all candles. Rule number 3, the highest high of all candles. The fourth candle high is the highest high of all candles. And finally, the close of the last candle. And that creates the momentum candle. So why did this momentum come in spite of 5 base candles? Can somebody explain me? It is because the fourth candle is a gap candle, and the gap between the third day and the fourth day is also considered as momentum. So going forward, it's crystal clear. The moment you see a gap, your mind should get momentum. You should not say, "Arey sir, this is base candle." No, so what? So what is candle 4 now? Can someone clearly tell me what is candle 4? Is candle 4 a base candle? Candle 4 is a momentum candle for me. Okay, friends. Now there is a request to draw the gap between the 3 and 4. Let me do this. Let me erase everything. Now there are two kinds of gaps. Now look at this. If I take the high of the previous, the low of the fourth candle, this is a gap. And what kind of gap? This is a blank gap, which means price never came here. This is a gap where price never came. If you take the close of the third candle and the open of the fourth candle, that is also a gap between the open and close. Okay, so that is definitely a gap. After the close, it gapped up. This gap is what is equal to open of the fourth candle minus close of the third candle. Which is the strongest gap here? This one or this one? This one is the strongest gap because this gap, the price has never come. This is a blank space. This is a blank space. Price has never come. Someday it will come. Okay, so I'm going to erase this. And I want to re-explain the extended and narrow range candles once again. The extended and narrow range candles are those candles where the total range, what is range? Range is nothing but the difference between the high and low of the candle. So if I look at it, this high and this low, this range is very high. If I take this high and this low, this range is comparatively smaller. This is an NRC, this is an ERC. So what differentiate between the NRC and ERC? The extended range candle has higher range, the narrow range candle has lower range. Now how do you define? Benchmark with the chart itself. Okay. Now let me clear everything and move on to the next step. Understood, friends? Is it very clear that there can be, if you, this is the place where you should apply your intelligence. How many of you think that reading only one candle you can make a judgment? You can't make a judgment. You need to look at have a holistic view of everything. There are 5 base candles and suddenly the output is a beautiful momentum candle. How did that happen? That's because of the gap. So you need to look at everything as a family. No single candle judgment. That era of trading using just 2 candles is gone. Okay, bearish engulfing, take a trade. Harami, take a trade. Doji, no. Such concepts don't work anymore, and it's extremely easy to code such concepts. If you have any secret formula using candlestick, bring it to me. I am going to code it. And remember, friends, all candlesticks can be coded easily. And anybody want any AFL on this thing, let me know. I have a ready-made AFL also. All right, so those points I've taken. Now, is price action only for trading? This is one question everybody asks. It's an universal concept. So whenever we discussed with people, this was the statement from everybody. Okay, it is a versatile concept. It is applicable for investing, position trading, and intraday trading too. Why? It entirely depends on the kind of format or the time frame that you are using. The principles of price action holds good for all time frames. In a monthly time frame also you can find a momentum based candle. In an intraday 1 minute candle also you can find momentum based candles. Will it change? No. Okay, So for investing, these are the standard guidelines for investing. Focus on daily, weekly and monthly time frame. For positional trading, I personally use 25 daily and 75-minute candles. And last time I had explained every one of you why I use 25 and 75-minute candles, because they complete the number of candles. For example, if you look at it on a particular trading day, you have 6 hours 15 minutes, that is 375 minutes of trading. Okay, if I divided that by 15, I get 25. If I divide that by 5, I'll get 75. And that completes the candle. That completes the candle. And I prefer to trade that, and I am not telling you guys that this is the secret formula. If you look at it, the entire program, entire i3t3 webinar, we have been talking about various concepts. I have been ruthlessly realistic with respect to concepts. I strongly emphasize the fact that there is no holy grail. Even in trading time frames, there is no holy grail time frame. You're entitled to trade any time frame you want, but only time frame that I love to trade is 25 and 75 for two reasons. Number one, these time frames are complete candles. They don't create a misleading candle. What does it mean? If you take a hourly candle, there are 6 hours 15 minutes of market hours, which means you get six full candles and 25% single candle. So I don't believe in such candles. I love to have a complete candle. So candles like 15 minutes, 25 minutes, 75 minutes will have a closure of the candle, and the next day it will open with a fresh candle. That is one reason. And second, I told every one of you that I prefer to do what the masses don't do. So masses don't take 25 75, rather they take 25 minute, 30 minute, hourly, half day and all that. So I stick to 25 75 and 2 days. So not that that is a secret formula. I want to at least do something which others are not doing. I would like to at least see something that others are not seeing. That doesn't mean these are the best practices or the best methods. And in intraday, you can apply it at 5 minutes and 15 minutes. And there are some intraday players who are trading at 3 minutes, 1 minute also. I know many algo traders who trade at 1 minute. So I trade only, I do not go below 5 minutes because of the extensive volatility that we generally see there. Okay, friends, any any questions here? So 25 and minutes is what I like instead of hourly. And I'll explain you in the times to come why it's a much better thought process. Okay, and absolutely I re-emphasize the fact that there is no secret. If you remember, when we spoke about the investment module 2 weeks ago, we had a clear discussion on the moving averages. I said I will only use the 55, 144 and 233 moving average because they are just Fibonacci numbers, and just to get a view of the direction. I don't even take an entry of equity investment entry on moving average because I've already told everyone that they are lagging. So our entry is always based on the strong levels of GAN, but that is just for the direction. Instantly, if you see GAN, you will not know where the direction is. So to instant judgment as to take some view of the direction, whether it is short term, medium term, long term, we use that. That's all. Okay. Now, why I avoid trading hourly candles? That is the reason, because they are incomplete. Understood? I guess this is what we already discussed. And I strongly prefer 25 minutes or 75 minutes candles instead of hourly candles due to their completeness. How to get 25-minute candles? Every time minute can be obtained in your charting software. Only thing is you need to go to settings of the intraday and define the times that you want. You can set 25, 75. You can even set 120 minutes for a blending of two hourly candles. I do that. Of course, AMI broker supports it. I don't know about other softwares because I've never used them. So we need to check it. Now let's make a serious promise. I promise to do price action trading without any indicator after this course. I will not use any indicator ever on my chart. And only exception is volume, since it is also the truth. Friends, I have seen many of my friends who attend various price action classes and purposefully they bring some indicator for bias. It's a very bad practice. And if you are bringing such an indicator, I believe you have not understood the concepts. And I've told this to many friends. They say, no, Ashok, it's difficult for me. No, it's okay. In the middle of difficulty where the opportunity lies, if things are so simple, every Tom, Dick, Harry would make money. Okay, and definitely these are not easy, friend. There is no holy grail already, because all the 100 students who enrolled into this program, I was very crystal clear. I never gave any promises to anyone, because the beauty of stock markets is their probability. If markets don't have probability, the kick will never come. So in fact, I don't use volume also. Okay, volume is also a cheater. Why volume is a cheater? Because let's say there are two scenarios. Okay, scenario one, a huge volume comes in just 5 minutes time, and the rest of the day it can be dry. Or instead of that so-called huge volume in 5 minute time, it can come in 12 5 minute candles, small volume. Technically there are only small volume. You will not have any visibility, and end of the day results are different. So volumes are also confusing. Okay, I do not use volume also in price action, but some people insist on volume, so it is okay. Okay, it is difficult, it is tough. Okay, and naturally we need to practice. And I have made a pledge that, all the when we talk about the advanced concepts of price action, when we talk about the RTM, 5 different patterns that we discussed, I am going to work on 1,000 charts. Okay, we need to identify. When you select a fruit, you will go to the mango shop and you select the fair mangoes, the clean mangoes, the mangoes which doesn't have the insect inside, or there is any damage to the mango, or it has not become very soft. We are very choosy. So trades also should be horribly choosy. Yeah, in fact, one of the patterns, one of my friend in the traders cafe has started working on it. He's very frustrated. He says, Ashok, this is irritating. I'm unable to find good trades. I said, wow, that is fantastic. Why are you irritated? Are you looking forward to look for more trades, or are you looking forward for best trades? Do you want quantity or quality? If you want quality, it will frustrate you. And that trade, if you can find the best possible trades, they will give our confidence, and it boosts our confidence. And this 1,000 chart mission we are going to take off immediately after I3T3 webinar. We will work on those 5 patterns, 5,000 charts I'm going to develop. I will take one assignment, and I have found one couple of guys in I3T3 program itself who are willing to participate, preferably Bangaloreans, because it's easy for us to interact, meet and review. And the complete output of these the 5 different patterns, the 5,000 charts analysis report, we will publish very soon. It will be published to all the students of our program. And but mind you, those guys who participate, definitely they will get huge benefit, because they would practice it, and it's really painful. If you have to do it technically, I'm saying minimum 10 to 10 charts you need to do. If you do 10 charts to make 500 charts, you need 50 days. That's roughly 2 months, and that's 1 hour a day. It's not more, or max 2 hours. And definitely full timers have to do that. Full timers, they cannot give reason. At least working professional to theek hai. But this project, this assignment, this particular analysis work will definitely yield solid guidelines. Okay, so certainly friends, there is nothing without hard work. Anything that you get without hard work will not last long. So fine. So summary of the learnings of the first session: we learned the basics of candlesticks. We learned 2 types of candles, momentum and base. We also learned that the candle can be an extended range candle, and are also a narrow wrench candle. And we also realize that there are many candlestick formations which are not at all significant, and we don't care about what kind of candlestick are there. So all that we care is who is under control, and by looking at the candle every one of us can make out. And we learned about blending of candles and how the gap candles behave, and how the gap candle can create the momentumness in each candle. And finally, we know how to drill down in each candle to see how it will level up, how the children are formed. Okay, so to conclude, remember the fact that the blending is a part and parcel of trading process. In the chart, you right click and change the time frame, that is blending, friends. And blending is happening by default. Okay, but you should ideally know how blending happens, because these are very, very basics which would help really well in the days to come. Okay, so when we any questions, friends, before we wind up from this session? There's a question. Sir, can you explain how to blend in Ami Broker? Sir, simple. Just go to line chart and right click and jump to weekly chart. You already blended it. When you jump from a daily chart to a weekly chart, what has happened? You have blend 5 candles into one weekly candle, no? If you jump from a 5-minute candle to a 15 minutes candle, what did you do? You blended 3 candles into one single 15-minute candle. Yes or no? Simple. So any more questions? Anything technical questions? I hope the flow and the rhythm is fair. So tomorrow, today and tomorrow, we will assemble all the building blocks. Okay, and probably from tomorrow second half we will take off with the what can I say, with the assembly of all the things that we learned. And so next Saturday we will go into the advanced concepts, and don't miss those sessions next week, because it's best to learn live. Okay, there is a request to go back to the slide where we discussed the multiple time frames. Okay, so I hope everyone understands why I use 25 and 75. There is a logic behind it. So I guess we spoke about the Taliban story, friends, remember? So let's be the Taliban, no, the smoker Taliban, not the gang Taliban. When America puts a bomb, it throws $1 million bomb on the gang. So it will not put a bomb on one person. Rather, it wants to kill 100% with one bomb. There's one question. I'm using 3 minute, 15 minutes, 75 minute. Is it okay? Yeah, it's perfect, because all of them are complete. All candles will complete. But only thing is, from 3 minutes to 15 minutes, you are blending 3 times. From 15 minutes to 75, you are blending 5 times. Is it fair? Oh, sorry, it's again 3 times. Sorry. No, 5 times. Sorry, 5 times. If you ask me personally, 3 5s are 15, 15 5s are 75. My apologies, Rajesh. It is perfect. It is absolutely perfect. It's a fantastic combination. Friends, make a note of it. Rajesh Thakkar uses 3 minutes, 15 minutes, and 75 minutes for his intraday analysis. That is the best combination anybody can have, because all candles complete, and also the aggregation model is such that it is 5 times. So 3 5s are 15, 15 5s are 75. So it's a perfect combination. And I am using 15, 75 and daily. 15, 75 and dailies. Yes, sir, it's perfect. So 15, 75 daily is also perfect. Okay, so we have just learned how this one, how do we trade. Definitely we are not going to trade with these things. There are a lot more things we need to know. So we just learned there is a piston, there is a cylinder, that's all. So engine is not yet ready for us to trade. It takes time. So let's assemble, let's put down all the components of the engine and then assemble one by one. Okay, somebody wanted to go to this drill down candle switch. Okay, so there is a question from Gautam. Can you explain 25 minutes, 75 minutes and daily? So Gautam, 25 minutes is a complete candle. Okay, end of the day 25 minutes candles gets completed, because there are 15 25 minutes candle in a day. 75 minutes candle is also a complete candle, because there are exactly 5 75 minutes candle in a day. Okay, and daily is also okay. One thing is, instead of 25 minutes 75 minute and daily, one of our colleague use 15 75 and daily, which is perfect. So 15 5 is 75, 75 5 is 375, which means there is a 5 candle merging at 3 levels. So if you ask me personally, instead of 25 75 and daily, I love to take 15 75 and daily. And even the 3 5s are 15 15 5s are 75, that is also fantastic. It's a perfect aggregation model. Sometimes what people do, the first two, from lower time frame to middle time frame, they go 3 times, middle to higher time they'll go 5 times. That is not balanced rhythm, but this is perfect. You go to intermediate time frame, here 5 candles makes 1 candle. From intermediate go to higher time frame, 5 intermediate time frame candles make higher time frame candles. So it's perfect. Okay, any more questions, friends? Is there any logic to choose 25 and 15? I told you already, because these candles are complete candles. End of the day they conclude. Because now there are in a day there are not just 6 hours, there are 6 hours and 15 minutes, which is 375 minutes. So all these numbers like 3 15 25 75, they're all divided, can be divided by 375, and you will not get a remainder. So always look for candles like that. Second, always have a consistent rhythm. Okay, friends. So if there are no questions, we will wind up. Okay, I will disconnect from the webinar and we will connect again exactly at, say, should we connect again at 11:30 or 11:15? Let's go for voting.